Welcome to the January 20th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. This is the fourth quarter client update. You'll find it posted at NetWorthRadio.com. And we've got here a 2% gain on the Dow. Look at this reversal. The big jobs report came out for December, 256,000 net new jobs, and everybody thought, oh, the Fed's not going to cut. They might even raise rates. And that sent the Dow to a loss for the year, and the other indexes as well. What happened right here? Big blockbuster earnings from the banks. It's absolutely huge. JP Morgan up 50% over last year. Goldman Sachs more than doubled profits. So far this year, so far this quarter, we've got 40 out of 500 companies reporting, but this is good news for the markets. Earnings growth 22% above last year. That explains a lot of the spike because the earnings report started hitting this week. Sales growth 7%. Of course, it's led not by financials but by IT. Now, only a few companies reporting so far, but so far so good on the earnings. Looks like these could be modest compared to that. This is a 12% gain projected in the S&P earnings for this year, and another 12% according to the Bloomberg analyst consensus for 2026. Now, the market may go sideways for a while as earnings catch up to the extraordinary increase in valuations. But who's leading? As of the close Friday, S&P Energy Index was actually 10% for the week, 9% when we prepared this chart. Oil and gas is leading. What's happening? Yes, we've got the inauguration coming up, but also because of that, you have deregulation. See this flat period right here? This is the North American export capacity for liquid natural gas. And what happens right here? The moratorium on approvals for new facilities is clearly going to be lifted, and the companies haven't waited for the rules to change. They have already prepared double liquid natural gas exportation, from the U.S. Over the next just 4 years. That is a huge increase, and it also says you go over to Europe, $14 for a million BTUs of natural gas. Here it's $4. Those prices likely to continue to move to each other, and that's appreciation for the value of the energy assets. Now here, this is the T-bill. We've had the Fed drama. I want to show you something about bonds. This will be a bond lesson you don't forget. I'm Spencer McGowan, your financial weatherman, President, McGowan Group Wealth Management. We serve affluent families right here from the Crescent in Dallas. We love to do plans. We can do it by Zoom, or you could come down to the office, get a tour of the Crescent offices of McGowan Group and the Texas Financial History Private Collection with bond lessons you won't forget, and this is one of them too. This is the rate on T-bills. These are the Federal Reserve cuts. By the way, the T-bills are predicting that the Fed will resume the path of cutting rates at least twice this year. And that'll be a debate. Every meeting is like, oh, will the Fed cut? Oh, will the Fed increase? Well, they've already told you they're going to do 2 this year, 2 next year, making the short rates 1% less, your money market headed towards 3% over the next 2 years. But what's this? This is the rate on the 10-year Treasury. Instead of going down, while the T-bill rate on the 90-day T-bill, it fell, right? Because Fed funds rate determines overnight bank lending, which determines the 90-day T-bill. Well, look at this. 3.6% back in September for this 10-year Treasury. Short rates went down, long rates went up. The yield curve is normal again, and that'll create some bargains, I believe, over the next year, and we're watching that close. The high yield market held up relatively well, while the Treasury market declined in price. Now, 4.8% was the peak. That started to come back down this week. Why? Core inflation, the CPI, actually decreased a little bit, showing that, okay, we are on that path. You take deregulation, more productivity, and that also could put pressure on inflation that begins to materialize as soon as the third quarter. Whoa, this is the price of a 20-year Treasury. You just looked at the rate going up on the 10-year. This is a 20-year Treasury low-cost ETF, and you can see the price goes from 102 down to 87. Well, you put it into a good, safe Treasury ETF, didn't you? Well, that doesn't mean you don't have price risk. That's called duration risk. And it works on the other side too. Convexity is if you get a big enough discount in the bond market that you're going to get appreciation towards par generally. Even if the rates go up a little bit, if it's a big enough discount, you got some capital gain potential. And we're working to make sure that that's in the portfolio. Now, Constellation Energy leading the way, 41%. They bought Calpine. So this is just year to date, but it is interesting. Walgreens having a 40% bounce back. That's pretty good. Looks like they might just make it after all. Texas Pacific Land up 26%. The other North Texas company here, and this is Vistra, the local power provider, they're up 23%. Those two utilities, Constellation and Vistra, benefiting from investor enthusiasm over the demand growth that data centers provide. That's AI impact number one. What's the other impact? I showed you what's happening in natural gas. What's the impact? Well, you're going to have a lot more of the natural gas flowing through the pipes, getting liquefied and sent over to Europe. Well, that's exciting too. But data center demand is more easily solved by natural gas, then solar, and then nuclear eventually. All right, what's this? This is the natural gas futures. I talked about a spike there. It's actually up 68% over the past year. Boom. That is a big appreciation, and it's one of the impacts of what? The AI revolution. You got to power all that processing power. Thank you for tuning in. I look forward to giving you the office tour and updating your plan for 2025. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.